Hello and welcome to Commodity Culture, where we break down the commodity space for both new and experienced investors. Before we get started, standard disclaimer, none of this is investing advice. Do your own due diligence. And today's guest is the creator and host of the successful Heresy Financial YouTube channel, where he has amassed over 160,000 subscribers through helping people learn how money works so they can control their financial security. Mr. Joseph Brown, welcome to the show.
Hey, thank you so much for having me. I'm looking forward to it.
So let's start off like I do with all first-time guests in your own journey in investing. How did you discover investing, and what is the journey that led you from there to where you're at today?
Yeah, absolutely. So when my wife and I got married, we were deep in debt. We had $30,000 debt. I was making less than minimum wage at that point. And so we knew we had to fix our situation. So I stumbled across a Dave Ramsey book and started getting out of debt and saving and investing. And that's when I got hooked. I just fell in love with it. And so I had a friend who was a stockbroker. And so he basically, helped weasel me into a job there. He told me what I needed to do and say in order to get hired. And so I got in and I just dove head first into the deep end there. And I got every license I could, did every job I could, and just really ate up everything that I could learn about how the financial system works from the inside. And it got to a certain point where I started to realize, hey, this doesn't make sense, actually. So the framework that inside the industry that they go off of is basically like Keynesian economics. And so started realizing, hey, this doesn't add up. The explanations about how monetary policy and inflation and the boom bust cycle and all of that, it's like either these people don't understand how it actually works, or the way that they understand it is just flat out wrong. So I started learning and studying outside and reading a lot of books and doing some research, and eventually got to a point where I realized it's just wrong, and I need to. I just can't keep on doing what I'm doing with integrity. So that's when I left and started Heresy Financial, and that's when I started the YouTube channel as well. And so that's what I've been doing since, just trying to teach people about how money works. Because if you understand how it works, then you can play that game to win.
So you spoke there about Keynesian economics. For those who might be unfamiliar, what does Keynesian economics mean, and how does it differ, for example, from maybe the Austrian school of economics?
Yeah, so Keynesian economics is the basic framework that almost everybody in the financial mainstream operates off of in terms of how the economy works. And so there's business cycles, and monetary policy is there to try and smooth out the business cycles and be there as the central bank is there to be a lender of last resort. And you can use fiscal policy to stimulate the economy and some soft central planning, and basically manage economic success through expanding or contracting the money supply. And it's all based on false equations and premises and assumptions about the way that the economy actually works. It ignores the economic calculation problem, and basically says that, hey, people who are smart enough at the top can control things in a better way than if you just let people make up their own minds and make up their own decisions about how to spend their money and who to do business with. And so the Austrian school of economics is kind of on the other side of that, and kind of the opposite of that, and basically starts from the premise of the economic calculation problem cannot be solved from the top down, and that the optimal outcome from a profit standpoint, from a wealth standpoint, from an economic success standpoint, will be done if every single individual actor is able to make all of their own decisions, and we don't have decisions imposed on us from the top down whatsoever. And so I would say those are the caricatures of kind of the extremes of those two views.
Yeah, that's a great breakdown. I think a lot of people believe these Keynesian economists have put us in the position we are in right now, which leads me to pivot to the state of the overall economy and the markets at the moment, which you talk about a lot on your channel, including persistent inflation, the housing market, and a lot more. So I'd like to get your broad overview right now on what you see as the biggest challenges facing investors in this turbulent economic environment.
Yeah, well, we've essentially gotten to a place where the economy, everything is either inversely or positively correlated to what the Fed does, to the dollar, to monetary policy. So it used to be you could keep your head down, you could work hard, you could stay out of debt, you could save. Every once in a while, you'd come across an opportunity to invest your savings in an asset that was a good deal. And you do that throughout your whole entire life, and you'll be fine by the end of your life. And you didn't have to worry about fiscal policy. You didn't have to worry about monetary policy. You didn't even know what the Federal Reserve was, or who the chairman was, or what the Fed funds rate was, or anything like that. And now we've gotten to a point where it has infiltrated itself into every single part of the economy so intensely that really it's almost impossible to have financial success unless you understand how the economic machine works. And so it's turning everybody into giving them the necessity of becoming an economist, almost having to study and understand how the financial system works. Because if you don't, you're not going to understand, hey, the Federal Reserve was printing money and making it easier to get money for 2 years. And so the money supply expanded. So that means everything was going up. And then they pivoted and said, no, now we're going to make everything tighter. We're going to make it harder to get your hands on money. And as long as they actually do that, which they have been, that means everything is going to go down, because the relationship between all the money and all the stuff is one of relative value. And so if all the stuff stays the same, but let's say you double all the money, well, now it's going to take double the money to get the stuff that it used to. And similar, if you have no change in the amount of stuff and you collapse the money supply by half, well, now it's only going to take half the money to get the same amount of stuff. And so that's what the relationship is between money and stuff. And that's why when we see them take money out of circulation, prices go down, because it has to adjust downwards for the amount of money that is in circulation to support those prices. And so it forces everybody to get into this, have a secondary job, if you will, of trying to research and learn and understand how the economy works. And if you do, then you're right now able to say, okay, I know that at least for now, we are in a tight environment where money will get harder to get your hands on, where there's less money in circulation. That means less profits for businesses. That means less price increases or a lot of price decreases for many assets. And so understanding that environment, you'll have a very different playbook on how you approach that environment than we had during 2020 and 2021.
Okay, interesting. Now, I also want to touch on the energy crisis that is emerging. I would say it's already here in Europe where I'm at. I'm in Croatia, and according to people I've spoken to here, apparently Croatia is going to be fine in terms of natural gas supplies and energy for this winter at least. But some of these bigger nations, Germany, France, the prices are just going absolutely insane. So I wanted to ask, in your opinion, what was the cause of this energy crisis, and is it connected to this kind of twisted monetary policy that has kind of taken over the global economy? Is there any connection between the two?
Yeah, that's a great question. And there's an indirect connection. And so pretty much everything, when you look at pretty much anything, you can trace it back to monetary policy somehow. You can trace it back to the money, because ultimately at the end of the day, everything that everybody does all day long, all month long, all year long, all life long, the other half of it is money. So when you go to work all day, you're trading time for money. When you go out to eat, you're trading money for food. When you live at home, you're paying money for the rent or your mortgage, your transportation, literally everything. The other half of it is money. So to the extent that the money is controlled, the more control you exercise over the flow of all resources, all capital in the economy, which means that when you do it wrong, you're going to be when you have when you have negative consequences, many times that's a result of controlling the resources in an incorrect way. And so when you talk about energy, a lot of people are saying, hey, well, we're getting tighter right now, but energy prices are going up. We're having, a collapse in asset prices, but we're seeing energy prices go up. So how are we continuing to have inflation when we have a deflationary monetary policy? So there's two answers to that. The first answer is that inflation and deflation work their way throughout the economy in three stages. First, they hit asset prices, then they hit goods and services, and then they hit wages. And so in 2020, asset prices exploded through 2021. They kept on going up. It wasn't until 2021, though, that the prices of goods and services started going up. So even though all the money was printed in 2020, goods and services didn't start getting more expensive until 2021. And then wages slowly start to catch up after that. And so then we had the asset prices start to collapse in 2022 as a result of the monetary policy tightening. So that's the first thing. Next, we're going to have deflation in goods and services. And then after that, we have deflation in wages, which is going to be unemployment, pay cuts, job losses, bankruptcies, things like that. And so you say, okay, but even still, let's say the energy prices continue to go up and, we can't see the future. We don't have a crystal ball, but it's very possible that still happens. So how is that? Well, can we trace it back to monetary policy? Yes, indirectly. So the reason why the world is so unstable in terms of energy right now is because governments all around the world have spent decades funding and subsidizing and supporting idiotic energy policies, making laws, regulations that force countries and businesses and people to make actions, choose decisions with their energy that they would have never, ever, ever, ever chosen if it was left up to just them. But when solar becomes cheaper because the government is transferring money from the population to solar companies, and that's what taxes are, and tax credits and taxes, when you have that wealth transfer, that forces decisions into going to those unstable and unprofitable forms of energy. Well, you do that for long enough, then you get underinvestment in the reliable forms of energy like nuclear, and then you end up with unstable grids and energy crises all around the world. And the only reason governments have been able to do that for so long is because they've been funded by the printing of money. And so, yes, if you trace it back, you can see the monetary policy of printing money, of QE, of expanding the money supply has funded governments to be able to enforce unprofitable and destructive legislation on the entire world that has built up the energy crisis that we are seeing today.
So where there is crisis, some would say there could also be opportunity. And you mentioned underinvestment in legit forms of energy. Oil and gas is one sector, nuclear and uranium, as you mentioned, which is starting to pick up some steam now. Is there any opportunity you see out there in any of the energy producing commodities as a result of this crisis?
Yes, absolutely. I think uranium might be one of the best plays of the next decade, maybe even longer. I'm probably at this point most bullish on uranium. Over the last 2 years, you can look up the stats on this. You can plot the number of people, the percentage of the population that is either for or against nuclear. And just in the last 2 years, it has just skyrocketed the number of people who are in favor of nuclear. It's gone from something like 40% to like 70%. It's insane. And so we are seeing the population slowly come around to the fact that nuclear is the safest form of energy. When you look at number of deaths worldwide of any form of energy, it is the cleanest. There's no CO2 emissions from nuclear. It is the only form of energy production that actually sequesters its exhaust or its byproducts from the environment. Every other form of energy puts its waste products back out into the environment, whether it's solar panels leaching toxic metals into landfills, whether it's coal, putting smoke into the air. Every form of energy puts its waste back into the environment. Nuclear is the only one where that's actually sequestered and kept out of the environment. And so it's the cleanest, it's the safest, it's the most energy dense. So this cup of water that I have right here, you get uranium, this much amount of uranium, that'll provide more electricity than I will ever use in my entire lifetime. And so it's extremely energy dense. We only need, in the United States at least, about 400 more nuclear power plants to equal all of the energy that we use. We only have like 45 power plants, and it has all of the about 10% of the nuclear or 10% of the electricity that we use. So we don't need that many more power plants, and they only take up a square mile. So all of the facts are on nuclear side. Population is waking up to it. Policymakers are waking up to it. And as we have the energy crisis continue to roll out, especially around the world, it's going to become more and more apparent that that's the only way to get the energy needs of the future. There's just no other solution. And the amount of uranium that's in production right now and the amount of time it takes to get new uranium in production is so slow that by the time everybody wakes up to it and realizes, uranium prices will be a lot higher.
You talk about gold a lot on your channel as well, and there's some interesting developments happening recently, namely the announcement that there may be a BRICS nation currency that's going to eventually be rolled out as an alternative to the US dollar for engaging in trade. And there is also some talk of it being partially backed by gold, or gold being involved with a basket of other commodities to back it. What's your thoughts on the potential emergence of a BRICS nation's currency? And do you think it will be backed on gold, and how would that kind of affect the gold market overall?
Yeah, so it's very possible. So we've seen since the late 90s, central banks have been net buyers of gold all around the world. About 99 is when they switched to be net buyers of gold. And since then, they've continued to accumulate more and more gold. And over the past 5 to 10 years, they've started selling treasuries, because that used to be the main asset that they bought and held. Back in the financial crisis, everybody bought treasuries to bail out the U.S. government so that the government could bail out our own economy. And like Japan bought a ton of US treasuries. Nobody's buying treasuries anymore. In fact, Japan is selling treasuries now, which is the first time they've ever done that, causing some big issues. Their currency is imploding. And so you see central banks all around the world buying gold. And now, over the last year, 2 years, you've seen more and more countries start to come out and say things that are saying, hey, we need to come up with a new currency for international trade. We're seeing more and more countries, BRICS plus Egypt and Saudi Arabia and Turkey, saying, hey, we'll start to denominate new debt in the yuan instead of the dollar. We're seeing these slow shifts, little by little by little. More and more countries are taking little steps. And just a few months ago, they came out and said, hey, we're looking at developing a new currency that's just for international trade between these countries. It was the Brazil, Russia, India, China, South Africa, Saudi Arabia, Turkey, Egypt. They're saying, hey, this currency would likely be backed by a basket of commodities, things like oil, things like gold. And this way, it would be like almost like a better euro, because instead of having one country like the US that can unilaterally control the currency and impose its abuse of that currency on the rest of the world, you would have decentralized control of that currency, which has caused problems when it's not backed by anything. But if the currency is backed by a basket of commodities, then you have even less control by the governments over that currency, which makes it even more stable. And so you have more and more countries looking like they're getting on board with systems like this. And it looks like it's only a matter of time. And whether it's whether it's China or Russia or somebody else, and whether it's fully backed by gold or other commodities or partially backed, nobody knows the details. We can't see the future. But what we do know is that the only thing that gives somebody an ability to abuse any position is a monopoly. So the United States abuses the dollar because it has a monopoly on the global reserve currency. And when you abuse power, you lose power. And so the more they abuse the power of having the global reserve currency, the sooner they're going to lose that position.
And speaking of abusing power, let's switch gears to central bank digital currencies, because I know you released a video recently on that topic, and you said that the Fed kind of announced a CBDC launch in 2023. Could you walk us through what you think their plans are and how that will affect the economy and society at large?
Yeah, absolutely. So they just announced that in mid 2023, about July, they're going to roll out a new service called Fed Now. And this is an answer to free market solutions to transfer wealth quickly with final settlement. And so Bitcoin and other cryptocurrencies, people have been using these in order to transfer money and have the settlement be near instantaneous and high security. Because when you go through the traditional banking system, when you write checks and you do ACH transfers and you do wire transfers and you move money internationally, it's built on systems that were built on other older legacy systems that were built on that are built on debt systems with batch settlement and clearinghouses that are built on really the gold standard, or I should say the gold exchange standard, which was itself a byproduct of the actual gold standard. And so we have all these layers of technical debt built up in the financial ecosystem that in order to have what the free market already has, they have to kind of build a new system. So you can't just go into the traditional banking system and say, okay, everything settles instantly. It just doesn't work that way. And so they had to build out a new system, a new infrastructure next to the traditional banking system. And so that's why it's taking them so long. I'm not positive about this. I believe they're using either Ripple, which is XRP, it's a cryptocurrency, or a version of it. And so they don't have the capability, the capacity, the engineering capability to build something like that themselves. And so what they likely did was just co-opted an existing stable coin or cryptocurrency in order to build out their own off of that. And so what they're doing is building the separate system that will allow the U.S. banking system, the dollar, to advance really into modern day and have instant settlements. And so you can send money to people when you buy things and sell things. That money can settle instantly. Now that doesn't seem like a big deal to most people, because when you do things most of the day, it looks like it's instant, but it's not in the back end. And so for businesses and large transactions and international settlement, it actually is a big deal that the United States could lose their competitive advantage. The problem with this is that it really lays the infrastructure for a central bank digital currency. Because once you've bypassed the traditional banking system for the infrastructure of payments, now you can bypass the banking system for the handling of all the accounts. So the next step after that is just to offload all individual and business accounts to one central bank, the Federal Reserve, and that way you can perform those transactions really instantly and make sure that there's no double pay, because it's all happening within one central ledger. You can make sure there's no double pay. You can make sure there's no fraud. You can take transactions back. You can stop them from happening. You can do all sorts of things that a central bank digital currency can do. And so this looks like it's version 1. It's the infrastructure being rolled out, the rails being rolled out before the train of the CBDC actually rolls on it. And so that's why I say it's kind of like boiling a frog slowly in a pot, because if they tried to launch a CBDC today, nobody would do it. Everybody would see it for what it is, and nobody would sign up. There's not enough pain, and there's not enough reason for it. Everybody's too suspicious. But you roll it out little by little, a little at a time. You slowly transform the existing banking system into just being the infrastructure for a CBDC. Most people won't notice, and then by the time you launch the actual full-blown CBDC on top of it, you'll do it at a time when there's a lot of economic pain, and people will realize, hey, it's not that big of a change from what we already have, so there's no harm in it.
Right. And how do you think it will eventually be used as sort of a surveillance tool to then track your purchases? There's a lot of talk about that, potentially put time limits on the money that you have, like, hey, we're going to give you X amount of dollars, like a UBI sort of thing, but you must spend it within this month or it's going to be gone. Do you think those things will happen eventually? And if so, how long will it take to get to that point by your estimation?
Yeah, it's a great question. So if we take a look at what the Federal Reserve has done over the last, let's say, 30 years, it used to be 30 years ago that nobody knew what the Federal Reserve was. Nobody knew who the chairman was. Nobody knew what interest rates were. Nobody knew what the Federal Reserve's balance sheet was. There's no such thing as QE, because QE is just a euphemism for debt monetization, which is in fact illegal. And so none of those things were happening. And so they took a little bit of a step in, let's say, the late 90s when they bailed out, when they orchestrated the bailout of the hedge fund long-term capital management to prevent Wall Street from taking a big hit. They didn't do their own bailout. They just orchestrated it and said, Wall Street, here's what you need to do. A couple years later, when the dot-com bubble burst, Greenspan lowered rates to soften the blow on the economy. That caused a bunch of misallocation of resources into real estate, caused the real estate bubble. When that imploded, they lowered interest rates and had to buy a bunch of assets, buy a bunch of mortgage-backed securities, start QE, debt monetization. Well, next time the next big crisis came around, not only did they lower interest rates, organize a bailout, and start buying assets, But they also bought more assets. So instead of just mortgage-backed securities and treasuries, they gave money to the Treasury to buy, at their special purpose vehicles at the Treasury, to buy assets like corporate bonds, junk bonds. Not only did the government bail out Wall Street, but they bailed out everybody. Nobody had to pay a mortgage for a year and a half. That's where most of the stimulus came from. Lower expenses, increased income, more housing rates or housing prices exploded. Everybody did a cash out refinance. So the entire economy got a massive bailout. And so we see how very quickly things have to escalate as you move towards and take one little step at a time. So looking at a central bank digital currency, it's possible that they don't abuse this power. It's possible that they just have the power and never do anything bad with it. But we kind of know their history and know their track record, and we can see very, very easily how they would justify in the next crash, hey, we want to make sure that a bunch of food businesses don't go out of business, transportation businesses don't go out of business, and a couple things that they label as essential. So they give everybody $1,000, but last time everybody spent that on Bitcoin and stocks. And so they're going to say, hey, we don't want another bubble to form that caused all the problems. They'll blame that on the problems on those bubbles. They'll say, you already have your accounts with us, so we can restrict where you spend this money. So this money can only be spent at businesses registered with us that have that sell food or sell transportation or housing or whatever it is. And so they can fine tune and direct the economy. And every time you do that, you just sow the seeds for a bigger problem down the road that will require more intervention and more fine tuned control. And so that is the evolution of how these things roll out. And so it may not even be malicious intent from the beginning, but the inevitable result is totalitarian control. And so it doesn't matter whether they plan to use it for good or for bad. The very ability for them to have that much power is the reason why we need to avoid it.
Absolutely agree. You touched earlier that you were bullish on uranium. I know you've got your eye on gold. Is there anything out there in the commodities landscape that's catching your eye? And as a follow-up question, and you can say gold or uranium, if you could choose only one commodity over the course of the next decade that you think is going to perform the best, what would you choose?
Yeah, that's a good question. I think gold and uranium are probably are my top picks right now. If I could only choose one, well, it would depend. So I kind of divide up my I have different categories. So for me, gold is not an investment. And so I'm not using gold as an investment vehicle to make money. What gold does long term, you can track it for thousands of years. It maintains its purchasing power. So for me, it's money. It's just savings. And so that's my savings account. And so whether we have inflation, hyperinflation, deflation, whatever it is, the price of gold will go up and down. But the amount of stuff that you can buy with that gold normally stays about the same for a long period of time. It'll fluctuate short term, but over long periods of time, the amount of stuff you can buy with gold stays about the same. And so I look at that as my savings account. And so if I'm looking at an investment, a commodity to pick to actually make money on, I would, for the next 10 years, and I could only choose one, I probably would choose uranium simply because of the supply and demand dynamics, how long it takes to increase production, the sheer demand that's coming with nuclear right now. I mean, China alone, they're building 10 new nuclear power plants right now as we speak. And so it's that the demand is only going to increase as the energy needs around the world increase and as the popularity for it comes around to the facts. And so that would be my pick.
And before I let you go, I want to get your thoughts on the oil and gas sector. Do you think there is still opportunity there, or are we reaching peak prices? A lot of people are saying that we won't even start to see peak oil demand till 2050, and that all this underinvestment in the sector, a lot of these companies are just buying back shares and paying down debt. They're not drilling new wells. Do you think there's opportunity there yet, or is this kind of the top in your opinion?
I don't have any hard opinions on what the price of oil will do, other than stay relatively high. There's again, it always comes back down to supply and demand. The demand is not going away. And the supply like you just mentioned, it's been severely underinvested in for a very long time. And laws and regulations, idiotic laws and regulations around the world have made it extremely difficult to invest in new production for a long time. And so the battlefield is set for the existing companies to do extremely well for a very long time. Oil doesn't have to keep on going up for all of the oil and gas companies to continue to be extremely profitable for a long time. It just has to stay somewhere around where it's at right now, and likely it'll probably go at least a little bit higher in the throughout the next 5 to 10 years. But yes, I still think for the major players, they're set to continue to make a lot of money for a very long time.
Well, thank you very much for joining us today, Joseph. For those people who want to hear more, could you let them know about Heresy Financial and anywhere else they can find you online?
Yes, main places to find me are going to be Twitter and YouTube, Heresy Financial, both platforms. My YouTube channel, I put out about one video every day. I'm tweeting every day as well, and Heresy is spelled Heresy.
Awesome. Well, thank you very much. And I'll put links to those in the description below so people can find it. And I hope to have you on again to continue the conversation.
Awesome. Well, thank you so much for having me. Had a good time.
Commodity Culture is a series on commodities and natural resources. If you would like to see more, be sure to subscribe and hit the bell notification so you're always up to date with the latest episodes.